Perhaps.
In alignment, please bear with. You want to jump on there? You're not into trade? Check.
TikTok is up, but talk.
I don't think I can hear you on YouTube.
Check. Checkity check. Check.
I don't think I can hear you on
Gotcha. Got you on TikTok. Good.
All right. YouTube. Move closer. Check. 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 Just a hair. Check. Check. Doing over on. Check. 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 Just a hair. Check. Check. Good afternoon, Johnny. Can you hear me at all, Johnny? Check. Check.
I think the volume's low on YouTube for some reason.
Yeah, it seems that way, doesn't it? And it was before too, and I don't know why. Good afternoon, Johnny. Can you hear me at all, Johnny? Pretty low.
Sound good on TikTok.
TikTok always
The volume's low on YouTube
to be the
for some
issue.
reason.
I don't know why I does need. And it was before too, and I don't know why. Good afternoon, Johnny. Can you hear me at all, Johnny? Pretty low.
Are you talking about YouTube?
TikTok.
Yeah. YouTube.
Well, they just came out last year. That's why they're so far behind. You would think they'd be more advanced than any of them.
Yeah, you would.
Are you talking about YouTube?
Yeah, YouTube.
Well, they
It's
just
really
came out
quiet,
last
isn't it?
year. That's why they're so far behind.
Volume.
You would think they'd be more advanced than any of them.
Yeah, you would.
Are you talking about YouTube?
Yeah. Quick.
Well, they
It's
just
really
came out
quiet,
last
isn't it?
year. That's why they're so far behind.
Volume.
You would think they'd be more advanced than any of them.
Yeah, you would.
Dougie.
What's up, my man? How are you?
Good, my friend. How you doing?
Good volume on
Dougie.
be lower than on TikTok.
Good, my friend. How you doing?
How to fix. All right.
Yeah, it's
And that's super low, isn't it? Good volume.
really delayed.
Yeah, well, there's a larger delay on YouTube than TikTok. Be lower than on TikTok.
Good, my friend. How you doing?
How to fix. Rating view is up.
Right,
So
that's
green there. Super low, isn't it?
really delayed.
Yeah, well, there's a larger delay on YouTube than TikTok. Perfect. Rating view is up. So green there. So just waiting for a response from one of our admins.
We don't see your chart on Zoom either.
No, I need to. So just waiting for a response from one of our admins.
We don't see your chart on Zoom either.
So let's. No, I need to. So just waiting for a response from.
Yeah, it's about a 25 second.
Roll. Should be able to see it now.
Yeah, it's about a 25-second.
Roll. Should be able to see it now.
Now you get that double echo thing.
Echoing. Do you still have your volume up on?
Yeah.
Turn off.
So it's his fault.
Yeah, it's your fault. Yep, that's what I did. Okay.
That is correct.
I'll stick. All right. Well, I guess I'm just going to turn up the gain. I'll blast out TikTok, and we'll go from there. So, maxing out the volume. YouTube, you should be able to hear me now. TikTok, just turn your volume down, please. It's not blasting out eardrums or crackling. Let's get to it. Mouse here. All right, welcome to American Dream Trading's futures broadcast for the public. We are here thanks to Chad Christian, who is the owner-operator of American Dream Trading, Inc. He has been in the market for over 33 years and now is teaching us how to navigate the market, both up, down, and sideways. Teaching us strategies that we can then change the rest of our lives with one trade at a time. That's our motto. Changing lives one trade at a time. My name is Doug. I'm one of the training moderators here at ADT. I am almost exclusively futures. I do play around a little bit with crypto. That's just where I like to. I don't typically do stocks or options. I like the simplicity of futures, and I like the energy of crypto. With respect that I can trade it 24 hours a day. Very appealing. Today we're looking at oil and some of the indices. We had a beautiful, beautiful trade today on the indices after some consolidation. We got some really nice pushes to the upside here. Harvard's sell-off. So, coaches indicators back on here. And you can see here on micro ES, I trade micros personally. On micro ES here, one of our main strategies is EWO and the break and hold the 9 for scalping. We have both in spades in this particular case. For the people that are in our Zoom, you're going to be able to see my lines and pencil drawings. For those of you that are out in the socials, you will not be able to see those, so I will use charting tools to be able to point the break and hold. Oh, okay, good. So what I've got here is ES and break and hold to the 9 right here. I'm going to zoom in, and you can take a look at what the actual criteria for a break and hold of the 9 is. What we're looking for is a break of the 9 EMA, which is the white line on my chart. Once we have that break and we get a good candle closure above that, what we're looking for here is a solid candle start above or on top or right next to the shoulder of the previous candle. Everyone see that in the Zoom?
Yeah, I can also see it on YouTube.
Okay, so I'm sharing the screen then, not the, and that's fine. So you get a bit of a freebie for the people out there in the socials. So what we're looking for here again is a break and hold of the 9 for a scalper's entry. Okay, we are talking about scalping in this particular scenario. The trick with break and hold at the 9 is you need to look left. What are my impediments to profit, as Mark would say? What is in my way for a continuation move to the upside? And if I were in a long at this point. Well, we have right here double top and a seller's wick. Well, when we have selling like this in this area, this entire zone now becomes something that I'm going to watch. Does that prevent me from getting into a trade? Not necessarily. Volume will tell me whether or not I get in and out of a trade. Do I have volume to the upside? Because if you've got enough volume, it will blast right through these double tops. Won't even think twice about it. And you can see that's exactly what we have here. We got our break and hold at the 9 on this candle. Our entry is here. And after that, it is a clean ride to the moon on this particular trade. When you are actually in the trade, if you are in a scalper's entry and the trade is just continuing to go in your favor, there's absolutely no reason to get out of the trade. You do not have to exit the trade if going in your direction and it's not showing any weakness or pullback in your direction. So as we got into this one, we were concerned about the double top area here. It closed, we have a candle closure there and a good candle start. Now, the thing that really gives me a lot of positive energy in this particular move is that we have no wick on this, on the 2-minute time. I tend to scalp on the 2-minute time frame. It slows everything down for me. I don't see all of the little micro moves and micro pullbacks. And so unless I really need to get in and out of a trade quickly, I will trade higher. So what we've got here is we broke that double top, didn't even come back to retest it. So strength is definitely to the upside. Particular. What I'm doing while I'm watching this trade is I want to make sure that we're staying above the 9 the entire time. If we break the 9, does that mean I'm out of the trade? Folks in our Zoom call, what have you been trained to?
No, that does not mean.
No, it does not mean. So over on the socials, can everyone hear our participant in the Zoom? Put a type of 1 in the chat.
Check,
You can
check.
hear him.
Test.
So you are correct. We are looking for it to stay and hold above the 9. So we have a test of the 9. We have a wick down, but a body closure above it. Tells me we still hide. Moving along that entire pathway, we have our first retest or pullback to the 9 because we got some distance from it here to here. And this is our retest of there. And we'll retest, support, and then we consolidated. Did not make any new highs. Broke down below the 9. So if we were in this trade as a scalp that turned into a continuation of the EWO, I'll get to in a second. That'll be the second strategy we talk about. When we're in trades like this and we have great entry right off the 9 down here, and we are miles away from our price point before we see any level of consolidation. Now this is consolidation, this is not pullback. This is consolidation, not pullback. This is the pullback, retest of the 9. Stayed handily above it until we couldn't. We broke and held. Here's our break, hold of the 9 here. Also broke and held the 21. We have a 9-21 cross, which shows strength to the downside or weakness to the upside, however you want to look at it. So shed points. Do a little scenario here. We get in with 5 contracts. Okay, we want to shed 50%. Make it 6 contracts, so it's simple. So a 6 contract entry. I'm letting this thing run. I see consolidation. I'm cool. 9's there. It's helping me out. It's keeping all the price action up there. I love it. We get up to the top here. We find a key level of resistance we'll get to later. If you properly chart, you would already know this and be prepared for any kind of action that is happening up here. And with consolidation areas, that should not be a surprise to you. Good. What coin is this? Matt, this is not a coin. This is futures, and this is micro ES, micro ES, S&P 500. So our shed points are nowhere near these consolidations. Consolidations, you are not shedding closely and very intently. Up here, we have our first pullback retest of the 9. If you were getting a little itchy scratchy, this would be your first shed right up here. First shed, 50%, coach's rule. But we didn't break the 9, so technically speaking, we're still in this. The next shed, if you were nervous about it, would be the break and hold of the 9 here. This would be 20%, your trade. If it continues and breaks the 21 for coach, he's full out on his trades. So this would be another 10%, 50, 20, 10, and you got 10% running. So you protect your trade. Long as the trade doesn't come back to your buy point and your stop, you are still in this sucker. Now the beauty of this strategy is that the longer it runs, the better the trade becomes. I'm going to zoom out here. Say our entry, again, right here, off the break and hold of the 9. Look at there. So there's our entry. Here's the key. In order to protect this trade on micro ES, depending on the broker, you only need a couple of ticks. So there's my protection. And where is VWAP?
Below or above that.
It's above it, right? So if VWAP is above my protection point or my stop to protect the trade, and I only have 10% running, do you care what happens up here?
Mm-mm. As long as it's
No.
showing, as long as it's showing strength, at least, you know, as long as it's not looking weak.
100%, right? So the longer the trade goes, the more VWAP has a chance to get above your buy position as the price action continues, which allows you to stay in the trade longer. So you shed at your highest points the most of your trade. So 50%, 10%, or 20% is your next, 10%, 10% running, and you let that sucker run all day long and close it out at the end of the day if it's you don't have enough margin in your account to hold it overnight. But as long as it doesn't come back and break below VWAP and challenge your stop, your last 10% is in this trade, and this thing could very easily find support, especially in power hour, and blast off again. So that last 10%, as we've seen in history, if you have ever watched or hung around with David in our live Apple chat, that last 10% can be more than the 50% you shed up here. Stop. So let your runners run. Make sense, everyone?
Yes, sir.
Yancey, have I ever left anything overnight? I have done a couple of swing trades in paper just to practice. But matter of fact, with futures, I trade in Tradeovate, so I get much cheaper margin rates 23 hours a day. We have some of our folks use Webull and other brokers, and some of those brokers have higher margin rates outside of New York trading session, which is from 9 a.m. to 4:15 p.m. That being said, the reason why I like Tradeovate, even though the fees per contract are higher, is that margin requirement. You can take a small account, say $500, and you can trade a couple of micro contracts of ES, $50 per contract, and not really impact your margin a ton for the entry, which leaves you room to add a contract and an EWO if you wanted to. What would that look like if we wanted to do the advanced EWO type stuff? Well, your actual EWO entry right here. So at that entry point, would protect your trade as soon as you've got enough space. Now, if you protect your trade too quickly, the pullback would have stopped you out. That shouldn't be disheartening. If you were up here and you saw the weakness and you shed some and you did everything that the EWO told you to do, kept your trade and trusted your indicators, you could stomach on a little bit of pullback here. If you collect it up here, so now the trade is actually free to you. You could stomach a little bit of pullback, see what it's going to do, because VWAP is right here underneath you as support. As it turns out, we found support off of the 55 and then came back up through the 9 and the 21. So if you had a runner on your EWO entry after you shaved up here, or however many you've got, you could re-add for another entry. So just because it pulls back on you doesn't mean the trade is dead or gone or you get out of it all the way. You shed and add. Now the challenge with that, if you add at a higher price point than what you actually bought in at after shedding, it's going to DCA or dollar cost average you into a new position. And your new buying position at this point, because we're in a long, would likely move up halfway between, depending on how many contracts you added and how many you had left, would move your buy position up. So then you would want to make sure that if you are going to be in a continuation of that EWO, you want to make sure that you are protecting your trade when you have enough space to. What does that mean? Well, space has everything to do with the volume and the ATR. Right now, the ES is a 16-tick ATR. So if I re-entered, or my entry here and I added here and my buy position came up somewhere in this area, I want to make sure that my stop is going to be far enough away to not get stopped out by rechecks or heavy rechecks. Because heaven forbid, you're in a great buying position here, shed where you needed to, added where you needed to, because now you're in advanced EWO. Holy moly, this thing is going to take off and trade, and you're just scalp entry turned into. Questions? Okay.
Hey Doug, I got a question on that ATR. How much above it do you buffer before you start protecting, moving that stop loss up?
So the way that I would probably look at this is I want to make sure, first of all, that I get past these double tops, right? Once I'm past the local double tops, and now I've got room to run, as soon as I got clear room, I'm likely protecting the trade for the fees and not much else. So key level breaks is what I'm really looking for there as far as space. I don't want to see this thing come back at my position out of these levels without being ready to either shed or get out of the trade. So my stop typically will be below the last low or whatever is appropriate for your risk assessment for your account. You have to make sure that you're doing the math. How to do the math, get the 7-day free trial for futures, come into the live Zoom, and we'll show you how to do it. So stop, entry, got good space. Now I can move my entry up, protect it with fees, and let it do the rest of the work. Fingers off the mouse. Run. This was a beautiful trade today. One of our members this morning called out the break and hold of the 9. A couple of our other members saw that, made their own assessment, got into the trade, and made a hell of a lot of money through this move. Now on a micro, let's talk about what this means as far as our scalp entry. If you were scalping and not running an EWO, as soon as you saw weakness, if you're like Mark, you're gonna shed 100%. He's a 100% shedder. And what I typically like to do is I'll shed some, I'll leave a runner, and if the runner is doing something cool with some volume, I'll chase the price action with my stop or use a trailing stop for the rest of that trade. So this particular move was 120 ticks. Well, we get $1.25 per micro contract on 120 ticks. I'm not a math this one. in front of you. That's $150 per micro contract on micro ES. Okay, so one contract, break and hold of the 9, all the way up to the top here. Good money, $50. Now, what would that look like in NQ? Same trade. Indices look very similar today. Point tool. So break the 9, hold the 9, entry. 573 ticks on the micro NASDAQ. The micro NASDAQ is 50 cents per tick. So half of 573. 260 bucks, 207 and a half. 287 and a half per contract. Okay. Same move, different commodity, and price structure. If you're going to be trading these different commodities, you need to understand what your tick values are, what your tick counts are, and how to do the math so that you have appropriate stop loss. Any questions on that? Well, for the moment, let's talk about what ADT's got going on so far. Right now, we are celebrating Black Friday a little bit early. We've got our Diamond membership on sale right now. Links will be in the YouTube. I can't in the TikTok, and I also can't talk about pricing in TikTok. So the Diamond membership is extremely well valued right now. And if you get the Diamond membership, you actually get all of our memberships included in that. That would be the premium membership, mentorship, futures, crypto, VIP gold, all of it, and VIP. So with that, some of the things that you get with all of those memberships, you get weekly Zooms with crypto every Wednesday at 7:30 EST. You get daily Zooms from 4 a.m. to 4 p.m. EST. 12 hours of expert training by our training moderators in the VIPs. VIP is stocks and options. Beyond that, you get the futures Zoom, which starts at 8:30 EST in the morning and goes all the way until 4 o'clock p.m. So you have 3 live Zooms happening every single, or 2 live Zooms happening every single day, along with a crypto Zoom every Wednesday. And I tell you what, Bucko and Chris over there, those guys are doing some pretty amazing things in the crypto space, teaching everyone how to trade with perpetuals safely, and coaches indicators and coaches strategies. Coaches strategies work across all markets. Doesn't matter what it is. Chart is a chart is a chart. If you understand how to chart and you understand how to trade momentum and volume, you can trade anything in the Right now, we have the crypto futures and premium memberships, 7-day free trial. They will renew at their regular rates. Again, I can't tell you what they are. I don't want. But if you are in our YouTube, I'm going to be posting some links real quick over there that you can click on, get involved, and start your free trials right away. Matter of fact, if you were interested for the next hour and a half, you could get the futures free 7-day trial, pay for it, and then come into the Zoom right now. Ask questions, meet the other members in our group, start your training journey immediately. You could also do the same thing if you're interested in stocks and options. You could get a 7-day free trial for the premium and join Palm and David and Maria and the rest of the training moderators over in options. We have a VIP membership. That if you buy the 12-month VIP membership, you get the gold for free. Now, what do you get with the VIP gold? You get 2 gold breakout rooms, live Zooms a week. They happen on Tuesdays and Thursdays. You also get Saturday Gold training with David that starts at 11 a.m. EST. That's every Saturday, holiday week. And a tremendous amount of material, thousands of videos, white papers, you name it. Each week, each of the Gold breakout rooms are recorded and available for review and rewatching, so that if you missed it, you can go back and rewatch. American Dream Trading is a full service education company. We care about your journey, and we want to make sure you have all the resources you.
Hey, Dog, quick question.
Sure.
Could you please take a look at MES right now as what you were describing before, the breaking hold of the 9 and also the 2 minute?
Yep. So most of our scalpers like to trade on the 1 minute. Do a quick break and hold. Now, ES, I'm on the 1 minute, and I want to point out a couple of quick things. We have a double top that we had to break through here. And you can see that we had struggled breaking. We broke into the double top area, closed at the top of it, finished nice and high. Could not break and hold out of it. So what did that mean? We needed to retest. When we came back down and retested, settled at the middle, almost to the bottom. Next candle started on the shoulder of the previous, wicked down, found support off the 200. Here is the break and hold of the 9. Happened, retested the 9. Now we're moving back up to retest new highs. So down here, I'll show you why a break and hold of the 9. You need to make sure that you're looking left and above you. Where are all of your indicators, right? So in this particular case, we break the 9 right here, right? We have a great volume candle to the upside off of consolidation. Really strong level here. You can see it because we have got a lot of bodies resting. So we break the 9. This is our hold candle on the 9. But what's right on top of us? 200. Well, the challenge with that is that the 200 is one of the strongest indicators on the chart. As we're coming up into the 200, more times than not, what I've seen is we will get a healthy rejection from it. So when I start approaching, when I look at stuff like this, and I'm watching where the indicators are, I want to make sure that the indicators, if I'm in a long, the indicators are underneath me and below me. The only thing I want to have to deal with is double tops and other structural issues. I don't want to deal with indicators that are above me for enough. So for me, I would have sat here and been patient. I want to see it break and hold above the 200, give me a good indication of the upside move into the double top area. And you can take this as a quick scalp if you wanted to, or you wanted to wait for the cleanest entry. Show you why. That candle is 11 ticks. Well, is that really worth $15 of risk for a reward to come up into that double top with a possible pullback? For me, no. Okay, so in this particular case, the juice to deal with a double top is not worth the squeeze. Because look what happened. We consolidated. Now this is a 1 minute chart, so we consolidated for 1, 2, 3, 4, 5 minutes before the breakout. So do you want to sit through consolidation when your entry point is right here on the 200, watching this thing test the 200 the whole time? No, you don't. So read the room, look left, know where your indicators are. Okay. The cleanest entry is a break and hold above that double top. And where do we have that? And now you can see with a clean break and hold, even with a minor retest to the level that we just broke out of, the consolidation that we just broke from, it never came back to the 9 until it started riding. The 9 caught up. Now, we are in a low volume situation. The ATR right now on the 1 minute on ES is only 8. So the candles are relatively small. It is Wednesday. It's the day before Thanksgiving. So volume right now is pretty low. And it is the afternoon. So right there are two instances of a break and hold of the 9 that I would not get into and a break and hold of the 9 that I would get into. Okay. Because we came down, tested, I got a good candle here, retouched the 9 and the midline of the center of this channel. I've got good volume through it. There you go. Break and hold of the 9 could get you past here. But for me, I'm a little bit more conservative with that. I would like to break and hold of the double top. Safest entry, it's the one with the most probable continuation to the upside. Once you break that double top and with a minor retest, which was on this candle here, little wick, came down, tried to test that level and the 9 again. Buyers stepped in, took over, and then we're off to the races. So for safety's sake,
I just couldn't deal with this. Because I was watching it the whole time that it was coming up to that double top, and I was just like, nah, that's just it is not. Nah, it's not for me.
no touchy, no
no
touchy. Bad touch, right?
Yeah,
it's not a good place to be, and you can see
just the whole movement is just horrible. I think.
Yeah. Well, in low volume, you do why risk it?
Right.
It's not worth it. So now the only thing in our way immediately, as far as resistance, is going to be the top up here, right? As far as major resistance, and look at where we just wicked from. So this is your double top pullback. Yep. This was a double top retest. You understand the difference? Can you see the volume in the difference?
Yep.
Baby.
Yeah, baby.
So as we came up through, we had low volume, low volume, low volume. Now look at the volume coming into the downside. Where are we going to be looking for support?
Right where on the double bottom, or on the double top.
Yep, the double top first. Okay. If it can't hold the double top, then we're going to seek support even lower. And now we're looking at the same double top area, act like support, that was acting like resistance before. Woo-wee. There goes.
That's a drop.
All right. We have news. Where are we?
The Thanksgiving Day news. Just kidding.
Why did this thing do that?
Oh,
all right. What do we got? We know we actually had some news on oil today. We had a pretty a one candle reaction on oil. It was a pretty good pull.
Yeah.
Then it recovered almost immediately. No, I don't see anything newsworthy here unless somebody's typing on their phone again. But this could just be profit taking. You know, we are coming into the holiday, so on and so forth. But
isn't the market open tomorrow?
Yeah.
Yeah.
No.
Oh, it's not. Oh, okay.
No. I think futures is open until 1. I posted the. I gotta look at that.
Open on Friday. Short
open
day.
back up on Friday.
Yeah.
So Thursday.
Closes tonight.
Yeah, most futures on Thursday are going to be closed.
Okay.
Crypto, FX, energies, and metals will be closed.
Okay.
Equities and interest rates will be halted.
What about indices?
That's your equities.
Oh.
And then Friday they close at 12:15. So Friday is going to be a short day.
Oh, wow. Okay. Yeah, I think tomorrow's my last day for the Top Step account.
Oh, yeah?
Yeah. All good. Didn't pass it this time, but I didn't wreck my account, so that's all that matters to me.
So why would tomorrow be your last day?
Oh,
that's your 30-day mark.
Yeah, that's my 30-day. Yep.
Well, it'll renew at $50.
Yeah.
If you want it to.
I think I'm gonna go back to paper trading for a little bit.
Now,
I mean, obviously, it's
well,
still kind of is paper
I'll talk to you
trading, but-
privately about. I'll talk to you privately about something.
Okay, heard of that.
You know what I'm saying?
You know what I'm saying? Exactly. Exactly. You bet.
You know what I'm saying?
You know what I'm saying?
There she is.
There she is.
I'm just so
she came out of the
sick over here.
sickness.
I'm so sick.
I'm so sorry for that, damn it.
That's
Yeah.
okay.
I know.
Busted up today.
I am. I feel like
Did you say
shit.
did you say you have croup?
Well, my granddaughter has the croup, so I
Oh.
think,
Yeah.
and I sounded like a seal when I first woke up. I was like,
You know, I had that. Not many people have that, and I actually had that all throughout my life growing up. I finally got rid of it at like probably 22 is when I stopped getting croup. But I kept every time I would get sick, I got croup. Every time.
Really?
Yep. Every time.
I usually get pleurisy, bronchitis, all that. Pleurisy is
Oh,
horrible.
damn.
Yeah. Yeah, but this is not bad. I just, I got to stay
Yeah.
away from my mom. That's what I'm worried about. I need to stay away from her.
Oh.
Yeah, I'm worried she's going to get it because, yeah, that'll be bad. She'll get pneumonia.
Yeah, that won't be good.
Yeah, and tomorrow's Thanksgiving. I'm supposed to go to my daughter's, so I'm going to try and take a bunch of something today. And I don't know.
Take a bunch of something.
Something. I don't know what, but, you know,
Yeah.
vitamin C, or I don't know. I'll drink a bunch of orange juice, eat a bunch of oranges, but my eyes all gross. I feel like a child. I'm pink
Yeah.
eye and stuff. I feel
Oh,
gross.
man.
Yeah,
Sorry
Well,
about that. Sorry
We
about
wish you
that.
well.
Yes.
well, thank you,
exactly.
Vaughn. Thank you so much. Thank you. Thank you.
Here's another beautiful entry on an EWO for M2K. M2K has just been a juggernaut. This thing has been so good all day long. Once we got out of consolidation, this was London session consolidation right here. Got into, let's see. Oh, here's where 9 o'clock where the contracts get cheaper. Here's our 9:30 open where we have this full and set for the launch. So our first EWO entry on this particular one would be right here. You could ride that up, sell off, and then wait for your next entry as it comes down to VWAP. Now, did it break and hold below VWAP? So if your EWO entry, your stop is down here, providing that you're managing your account risk appropriately for your size account, you can also put your stop just below support here, which have all of that support right here to help keep the price action up, along with VWAP 200, 55, the whole works, right? So in this particular case, there's a lot riding or a lot going for you in upward momentum. Came into here, had this rejection, and then we consolidated for a little bit, finally broke out of that consolidation here, and then it just slowly ran for the rest of the day. So this EWO, if you protected it properly and shed properly throughout, could have run this all day. That's why I say training, let your runners run. Because once you get past all of this consolidation here and you get far enough away from VWAP, it hasn't looked back all day. So this particular trade, if you were in it from the beginning, here's your entry. That move is 284 ticks in M2K, and M2K is 50 cents per tick, and it has 10 ticks per dollar movement. So every 10 cents, it's going to pay out 50 cents. So in this particular case, 284 ticks, $142 per micro contract. This was the E-mini, it would be $5 per contract. Very, very nice trade. And there's no reason to get out of it. Okay? So if you've got runners that are still in this thing, your runners are running forever. No need to close this thing out. Now again, margin requirements. If you do not have the margin to stay in the trade beyond the close of the market and hold overnight, which I don't recommend if you're day trading, you're going to be swing trading, you're looking at things a little bit differently. You lose higher time frame. we're day trading down here. We're in the lower time. Well, typically not holding out of the market. Quick. But this particular EWO right now, from 9:36 in the morning, has been running all day long. Absolutely zero reason to exit the trade, outside of maybe getting scared out of a couple of contracts here in the beginning. So all day long, not much reason. Been respecting the 9 pretty much all the way until noon today, where we had realistically, past consolidation again, our first pullback. So this would dead point right here. Could shed here if you got nervous about that. But again, do you trust your indicators? Bottom of the trend channel, you get the 5 right there. You're miles away from V. So it's all about how much capital are you willing to forego. Don't believe the trend going to direction. And what we tend to find with M2K is that once it picks a direction, it pretty much stays that way most of the day. So we've got this beautiful uptrend. We can trust our indicators. We can trust the trend channel to keep price action moving in the right direction. So beautiful EWO, rocky start, beautiful continuation for the rest of the day. Check your trade, put your stop below VWAP, and as long as it doesn't come down and break and hold, you're still in the trade for your runners. More times than not, your runners, again, will make more money than your early sheds, especially on trending days. Any questions? Mark over on TikTok, thank you for the question. Did you understand everything that I just went through? Did you see where I was talking about entries and sheds with respect to the EWO? Let me know. Nick over on the Tickety Talks or on the YouTubes, what time do contracts get cheaper? So for futures in Webull, and it's broker dependent. So in futures in Webull, the contracts reduce in price. They go to the intraday margin at 9 a.m. EST or 8 a.m. Central Standard Time, which is where the CME group is from. They're Chicago Mercantile. So they're on this Central Time zone. You know, if you have any other questions, keep the questions coming over there in the TikToks. We're up to 5K on our likes. I'd like to see us get up to 10K if we can. That actually pushes the algo out there. And if you could please, everyone that's in here, all 20 of you, including myself, type in hashtag FYP. Hashtag FYP. Why does that matter? Well, free. Because that actually gets engagement, tells the live where you came in from, and pushes engagement to social. You bet, Nick. Good question. All right. Oh, we did some oil. We had a brand new member do some oil trading today, and we had discussions about that, which was a really good discussion as well. All the indicators are behind. Is this a 6-star trade? Not necessarily. Here's the reason why. In order to be a 6-star trade, it has to be at all time or at daily high. So if we haven't broken a recent high here, and we're coming up into this area at this point in time and here, this would likely be a 5-star. It's not until we break that high and make a new high that it becomes star. Break the high, and the other the other stars are based off of indicator position, based in relative space position to price. So if I'm looking at gold right now, we're at a 2-star green, 3-star red. Go take a look at gold. So back to oil. Okay, here's gold. We are horrible to the downside at 3 stars. Right now, we're in a red EWO, red super trend, and the 21 EMA is below the 55. 3 stars that have accumulated in that. Over here on the green side, broken held above VWAP and MA. So that's how the stars at least work in conjunction with the EMAs. They're all based off of EMA position and price action. If you're in TikTok, hashtag YP works on clarifying. YouTube doesn't really. Thank you very much for doing. Also, please don't forget to like and share the live. That gets us out there as well. Okay, back to oil. So we were having a discussion earlier about oil and entries. What would we look at for scalping entries? Not necessarily EWO, but we can also talk about the EWO here as well. Even though these are pretty nasty EWOs, here's your entry. You would have had to stand some drawdown, pull back, but we did have a nice rounding and good support off the 9. Now, the only thing that makes this one a little challenging as an entry is because you have this giant gamma candle. Got you breaking through 4 of the major indicators that we use. VWAP, which is the biggest one, 55, 21, and the 9. One thing I want to point out to you, look at this stuff, scalper, is we have the 921 cross again. Right through this volume candle, we've got the 9 crossing over not only the 55, but also the 21 and VWAP all at the same time. So on this entry, an EWO entry on this second bar would not really be of much concern for me, because what I'd be looking for here is an overall move. Just looking at candle action, I want to make sure that I stay above half midpoint of this candle, which is where all this consolidation. If I can't stay above the consolidation, then I'm likely going to see a further pull, and this was just like in a reach of the lower level. But because we had good strength here and the 9 was here in support, I'll turn the indicators back on so you can see it. There was no real concern of a pullback. So entry on the second bar, albeit a red candle, I probably again would have waited for the break and hold of this level. But a pullback in this particular case with your stop below the actual body of the candle down here, which by the way did not have a wick. So this was a pure volume move. No wick on top, no wick on bottom, all body buyers, right? So strong move through consolidation, right up to the double top. Nice handsome close. We got a good start, but we ran into a bit of a buzzsaw up here. We come down and find mommy and daddy down here for support. Then we come back, test this level, and never look back. Here, testing, break through. Why does that matter? Well, what we were talking about earlier was entries, and entry criteria is the key to profit. Right? So with respect to the member that we were chatting with, this is very difficult to trade. You're not trading off of double tops or key levels, right? You got minor pulls, retest, minor pulls, consolidation, and just in general low volume move down here. What we would be looking at for entries is good, strong support, rounding up, okay, if you're going into a long, and good volume candle. You want to see volume. So these are better entries, break and holds of the 9 over here to ride up to a higher level. Over here, I'm going to turn the indicators back on. You're going to see just how choppy this indicators and the definition of diddling in the middle. So we don't want to take trades like that because the green, red, green, red, green, red, green, red, and your emotions take over if you don't trust your indicators, and you start making emotional decisions, which tend to force exit trades, force losses if you're forcing trades. You get a red candle and it pulls back against you and you get nervous, so on and so forth. Just not a good scenario. So off of this top, we retested the 9, could not break above the trend channel, and then tested the 9 one more time, excuse me, finally broke and held below. Now, the distance between the break and hold between the 9 and the 21 right here, not very much. 5 ticks. 5 ticks on micro oil, that's only $5. You have $1.70 in fees that you have to cover, so about $3 in profit. Not worth it. The reason I say that between the 9 and the 21 is because, again, the 21 is going to act like support. So why would you scalp into support? Scalp a short in support. Don't. You want to make sure it clears support. So we get a break and hold, but then we've got another support line right here. What is that? That was the previous day high. Previous day high is a very important level for us at indicators. So we've got several reasons not to dink around in this area. 1, the juice is not worth the squeeze. 2, you've just got way too much support here. You got the middle of the trend channel, you got the 55, which can be pretty weak in general. It is the weakest of the 5 indicators that we use, but we do find that we get some good support and resistance out of it from time to time. That being the case, we've got the previous day high, trend channel, 55, previous high as support. Just a no bueno situation. This would have been a very emotional downward trade to once it got down to VWAP, this is your entry down here. This is where you're watching, right? So don't make a high, we make a higher low, find support off of the bottom of the trend channel at 200 in VWAP, and we get a good move up through VWAP. The 9, we have a break and hold of the 9 right here, but we're right in the middle of the 21 and the 55. So again, I break and hold, and we were talking about this in the live. I would want to see a break and hold of the previous day high before I even consider getting into the trade, because this has acted so much like support and resistance immediately to the left. So again, when you're making your entry criteria, if you do not have an entry and an exit plan, and then contingency plans within that, don't get into the trade. Michelle, do you have any questions about anything that I'm talking about over on TikTok? I'm saying. Good to have you back, Charles. Our Zoom, does anyone in Zoom have any questions? Are you looking at anything about micro oil as we're going through it? Okay, what I'm going to do is I'm going to do a quick replay back to this buy point. And the reason why is I want to show you where the trend channel was. So in our discussion earlier, we got an EWO signal to the upside. The EWO signal broke the previous day high. Got this consolidation zone that we want to break out of. Then we've got this high right here. So we've got some things to consider. And what the discussion led to was our consolidation area was really our largest issue. So we wanted to make sure that we got out of this. These off real quick so you can see this consolidation that really gave me pause. I wanted to make sure that if we were going to get into a trade, not having to deal with this consolidation would have been the best. So a break and hold. Now it seems like you're wasting a lot. Like there's a lot of money here, right? Well, there's also a lot of pain if it doesn't continue to go in your direction. So from a conservative perspective, break and hold of key level and make sure that you've got good volume moved. So I'll turn on coach's indicators again so that you can why, when I was discussing this with the member, why I would wait. Just because we have an EVO entry doesn't mean it's a good time to enter. We have to read the room. So here's our EVO entry on this candle. Did not break and hold yet. I want to see a break and hold, and then I've got this double top up here. As we break and hold this, there's the candle. You can see that it went directly to and rejected. Me be waiting for break, hold. Now, this is not the hold candle, the break candle. There's your hold candle. Challenge here. Now we're miles away. Did I miss the entry? Maybe I did. But I'm not going to mess around with stuff. Again, not talking about a ton of money here. This move right here, that's only 11 ticks. That's $12 micro contract in oil. And I'd want to see further examples. There's the pullback. Okay. So for me, I'm ultra conservative when it comes to EVO entry because I'm accepting a certain amount of risk when I enter. And my stop loss is going to be down here. What I do not want to have happen is double top, burst through my position and snap me out of the trade. Oh bueno. What I look for in an entry is I want to see it break this key level, the trend channel, any other support or resistance that might be over here. I want to see it break, come back down, retest key level, then look for the entry off of that. Reason being is now I'm free of all of the indicators, the consolidation zone, the double top, the whole works. I have a cleaner entry to the
We're now in power hour.
full. There's your break of key level again. Confirmation of the move. Retest. Validation. Entry. Here's my entry. Now I'm riding the 9 and I'm plunging the micro double top. So as it came down, I got a good buyer's wick, straight off of support. 21 is actually pointing to the sky. The 9 is pointing to the sky, is moving up way above the previous day high. And VWAP and 200 are nowhere in my view, in the rear view. Down here where the bounce happened. So low volume, I'm not dinking around in the middle here. Okay, I'm waiting for a good hold, good candle, and volume. So my entry is here. 9. We go. we have okay. So EWO entry down here, would it have paid off? Sure. Would have had to sit through some pullback and some consolidation and so forth. Me personally, I like to wait for better structure move and get in cleaner break and hold 9 with volume. Volume is the key. And you can see on this candle right here, we had the most volume. Everything over here was just super low. Any questions? Yeah, Vanette, I do too. One of our members was mentioning the fee in Tradevate versus Webull, and even though the fees are more expensive in Tradevate, the margin is really the most attractive thing. So Tradevate has a couple of different fee structures. You do the free version, then there's a mid-level, and there's a higher tier, which is a lifetime, like $1,500. Get fees reduced to 9 cents per trade plus the exchange fees. Or 5. I clear. You be more specific for me, please? Yeah, after consolidation. So once we broke this consolidation area here, there's a quick scalp, but you're running into that consolidation there. This is the double top that we really want to break through, but there was discussion happening in this area. And that's the only reason when I forgot to mention, I apologize. That was the main reason why I wouldn't enter here, because of this. I want to see it work through this and break and hold with volume. So as it came up into this area, this was a great entry off the 9 here. And I'll run through the control candle stuff again with you so that you understand when I'm looking at staying in a trade. So low, high, there's your next level of consolidation. So we broke out of this one, found support off the top of it, back up into this double top where we really want to break through the midline of this for all this. And we did that. Great move. Buyer's wick. Nice strong move on the next candle. My entry. And I'm watching the top. The reason why my entry is on the volume candle is because now I've got a candle that I can set a new range with. So when I see a candle like this and I get in on it, I want to make sure the way that I'm going to manage my trade in this particular area, I'm going to watch for candles to pull back to the midline of the overall candle move. If they don't do that, or they come down and retest the midline and then launch, that tells me I'm still maintaining strength to the upside. That being the case, if it breaks down below the midline, that doesn't show me strength, right? I don't mind a retest. I don't mind to breathe back into the candle. But when you start challenging 50% of the overall move to the upside in the first couple of candles afterwards, that doesn't show strength. I'm going to be managing my trade based on that. And again, all we did is consolidate here for 10 minutes, and we had a nice push up. And into a key level of resistance up here at 57. I'll just snap a line. See? And we're going to go through price action back to where we're now. So you can see as we broke out of this double top, We never looked back. So how would I manage my trade from here? Just like we did over here, breaking through the double top. I want to make sure that I am breaking this double top area. If I can't do that, that does not show me strength. About that. Consolidated on the bottom side. Again, low volume. We're in the afternoon, and when you're talking about oil, if you don't have consistent volume, it's very tricky to spread on oil, even though it's pretty tight right now. I'll show you some of the things that we were looking at earlier down here. All of this dot braille type stuff over here. Got candle closure here, candle start here. Called spread. Difference between the closing price and the starting price. Closing price of the previous candle and the starting price of the next candle. That's the spread. So when you have large spreads in between candles, I tend to want to see the market calm down a little bit. I want to see consistent price action and volume, because volume is what makes the market. Right? Without it, ain't moving. So when it comes to that, I want to make sure that I've got good break and holds of levels, solid candle movement, good volume, respecting control candles, so on and so forth. If what you see is a bunch of candy canes, one of our moderators says, red, green, red, green, red, green, that doesn't show momentum in either direction, up or down, just purely consolidated. So I tend not to want to get into trades with respect to that. I want to see good break and hold of the 9 and key levels, and then protect the trade when I've got the opportunity. Trade it. Not sure, Michelle, what that's referenced, but to do some math, if you've got a relatively small account, say you have a $500 for G's, we'll run through a little scenario. You got a $500 account on Webull. Let me get you to Webull. That's so cool. When you get to Webull, you're looking at margin rates. So over here in the quotes, intraday margin on oil is $143 per contract. So if, say you have a small $500 account, that $148.83 deducted from your account and held in, for lack of a better term, like an escrow account. They just kind of hold it over here until you're out of the trade. If you are in a winning trade and you get out of that trade, all of that margin gets returned to your account minus the fees. Well, what are the fees for the contract? Well, in micro oil, to get in and out of the contract, $1.70 total. If you are not, if you get in without a stop, it's 89 cents. That's per direction. So it's in and out, which is why when I get in my trades, I have a stop loss, my full fee total, which is $1.70. So why does that matter? Well, oil, micro oil pays in $1 per tick. So I need 2 ticks to get into the green, and I'm going to be in the green by 22 cents if I protect my trade and it pulls back. So understanding what your fee structure is really only important to protect your trade. Outside of that, you don't focus on it. Focus on the trade itself. Focus on making sure that if you're in an EWO, things are respecting the 9 and the 21, and you're shedding where you need to shed, and you're adding where you need to add if you're doing advanced EWO. so on and so forth. So on a $500 account, 143.83, that margin gets returned back to you. If you're in a losing trade, it will be the cost of your fees, always. The exchange will always get paid, whether you make money or you don't, and the loss. So if you suffered a loss, then that margin will be, that amount of the margin will be deducted from the account. Then you can get right back in again. The beauty of futures is we don't we don't have to deal with the PDT rules of the cash and stock options world, the margin requirements over there. We don't have to have $25,000 in our account. We don't have to have a ton of advantages structurally to keep things simple for futures. Now, you can make an absolute ton of money without Greeks over there and working in your favor. It's highly advantageous. However, on large candle moves like this to the downside, if you're in a long, this gamma candle right here, you're selling off all the way into that candle, okay? Because acceleration is increasing your profit quickly. You get the same kind of move in a large red candle to the downside. Acceleration is taking away your profits exponentially, quickly. But in futures, we don't have to worry about that. Okay? It's the same price, tick value, as it's going up, as it's coming down. There's no delta. There's nothing to worry about as acceleration, none of that. So we deal, basically trading stocks, we're dealing with pure price action, which makes it a little bit easier to focus on the trade, at least mental map options. Yeah, Jason, I'm sorry. Not welcome here. We don't do call outs, and we do not offer financial tax or investment advice. Thank you very much. So with respect to that, let me run through some more legal jargon real quick, since somebody posts something highly dangerous. Follow that. We are not a call out group. We are an education company. Full stop. You join our group with the memberships. Our entire modus operandi is to make sure you have everything you need to succeed. Training materials, live Zooms, the whole works. Come to us for education. We're going to fill that cup, overflow it as much as we possibly can with the right kind of information. Call outs and stop losses, things like what you just saw over on TikTok, are not it. Now, if you want to follow people like that, by all means, go ahead. If you don't understand where that information is coming from, you are risking your account. Not safe, and it's so. You come to us, we're going to teach you, going through just what I just went through with the entire group. We're going to teach you how to trade. We're going to teach you how to look at the chart, make your own decisions as far as entry criteria go, and get you to a place where you can be successful without having to rely on somebody else to tell you what. Holy moly, look at NQ. What a mess. NQ has been pretty choppy most of the day. We had a couple of good runs, but holy moly, Wick City here. ES, towards the end of the day, also looking a little challenging here. Excuse me. And on the 2-minute, we're in a slight downtrend at the moment. We're pretty flat. Now, scalper's perspective. Take a look at all this garbage here. all of this wiki tops and all the consolidation that we're dealing with, middle of the trend channel, the whole works. If you were patient and you waited for all of that to pick its direction, find support, are on top of your scalping game, this is your break of the 9. This is your hold candle. Are off to the races up to the top of the trend channel again. Keeping an eye on these double tops. So what would that mean as far as entry? Now, it doesn't look like much because I have the chart relatively small, but that's 22 ticks. Again, 22 ticks on a micro, $27.50 per contract. Whereas if you were doing an E-mini, it'd be $275 per contract times the micro value. So really nice scalp here, right up to the top of the trend channel, which if I look to the left again, take my highest prior to the double top. That's really what I'm looking at to get through right now. You can see that it broke the top of it, but did not hold. And then the next candle, we're pulling back quite handily. So if you understand your consolidation zones and your tops and your bottoms, then you can make solid trading plans into and out of areas. Turn the indicators back on and you can see that we came up to the top of the trend channel and pulled back all the way to the 9 in one candle. So this just took, we're not even done yet, this is a 2-minute. So this just took 2 candles out in one move. What do we call these kinds of candles, everyone in the Zoom? We call them engulfing candles. So we have an engulfing candle to the downside. Our continued upside momentum has now been washed, at least in the interim. Now, no wick on the bottom. No wick on the bottom, shoulder on shoulder. Does that tell me that we're moving to the upside? Only the first candle I want. Candle. Because what's likely happening, run through this scenario on the downside since we're on the upside, have a engulfing candle to the downside, which now becomes our new controlling candle price action moving forward in this particular area. So what I look for here, again, here's the midline, that overall move. Have we broken, held above that? We have not. It was a previous double top. Did we break, hold above that? We have not. It does not tell me that we're to the upside. This is a great scalp. I would have gotten out right here at the top of the trend channel and waited for confirmation and break and hold of the trend to the upside move. This being what it is, nice candle to the upside. Again, I'm not in this trade yet. I want to break and hold of this level now. Seeing this large red candle, and it tells me that sellers are interested in this area. I want out. I'm going to go long. I want to break and hold. If it can't do that, then I want to break and hold to the downside. And I've got some clear room to run here. Body's arrested. Okay. Indicators back. So it looks like got a nice support bounce off of the bottom of that channel and the 9. However, I don't see a lot of volume, no oomph, as Mark would say. So in low volume situations, you are looking for clear direction, not consolidation. So break and hold the 9, clear direction. Out at the top, or if it stutter stepped or you got scared out by the seller's wick because you're scalping, you're not EVOing, you're exiting, right? Because you got a double top, you got all this over here, so on and so forth. Challenging move, but doable. Once it pulls back and does this mess, I'm not touching it. Again, no volume to the upside unless you want to get into a trade and watch this thing color change 14 times before it does something, and it might not do something in the right direction. Not safe, it's not worth it. Thank you, machine. Yes, and the overall cryptos. So, yep, nice. Yep. So here we are, squarely in consolidation now. This is no touch zone. With coaches indicators back on, breaking below this, you've got the 21 right here and the 55 right here. Impediments. Middle of the trend channel. And then you've got the double bottoms down. Being ultra conservative, want to make sure you get clearance from and get consolidation like this. It makes All right, we're at 7.9K and the likes over on the TikTok. Those likes go. And again, if you came in from the FYP page, please type into the chat hashtag FYP. Pull or push us out for you pages. Here at our Zoom. Over in Zoom. Good, good. All right, somebody give me something to look at.
I don't have anything to look at, but do we open up to tomorrow night like Sunday night, or is futures open Friday morning?
Futures is open Friday morning. From what I saw, did you see the schedule in the chat there? Did you come in after?
I came in after.
Okay, let me copy that for you.
All right. You would think it would open tomorrow night like Sunday, but
I've got.
let me scroll back and see if I can.
It's yeah, Matt.
Oh, there it is. There it is.
So there's your actual schedule.
Okay, great.
And then, and by the way, no, people aren't probably gonna love to hear this, but Sunday night's Zoom has been canceled for the holiday weekend.
Oh, I thought you were saying like moving forward. I was like,
No, not
what?
entirely. Are you kidding me? I love
Oh, okay, good. Yeah, okay, good.
No.
That was
What would
what
you do on Sunday night, Doug?
Sleep.
Yeah,
Probably.
right.
Exactly.
Because I wake up at 1 or 2 o'clock every morning.
Are you serious?
Yeah. When I was opening pre-market before James took over and is doing a good job, by the way. I would close Sunday futures at 9, or we ran a little bit late, like do sometimes because we're just hanging out, doing the same thing we're doing now,
Right.
except with music in our Zoom. Yeah, I would close there. I have an English master. He's been conditioned now since I was opening pre-market. He's now conditioned to wake me up.
Oh,
he's my
Lord.
alarm clock.
Oh, Lord.
So he comes in and I can hear him. He's 185 pounds, so 4 paws on 185 pounds. You can hear him coming.
Oh, yeah, you can hear him.
And then he'll lay on his bed and he'll sit there and Getting up yet?
Jeez.
Getting up yet? Getting up yet?
Oh, that's got to be fun.
I love him to death, but I'm not open to free market anymore, buddy. I can't seem to get that through his.
I ain't waking up this early anymore.
Right.
That's the last thing I'm doing.
Yeah, so I get up and I'll watch videos, or maybe I'll chart for a little bit. Might do some paper trading. I had to pull some money out of my trading account to take care of something else, so I've got that back down. Started with right back up here.
What time?
Hopefully everything's all right with that, Doug.
Oh yeah, no, that's the
Okay.
whole point, right? So you trade it up, take the money out, you pay some
Yeah.
bills with it. How you do?
Good. I'm glad that it's not anything bad.
No. Matter of fact, I was quite shocked with my knee injury that it didn't cost more than it did.
Oh, it was for the knee surgery.
Well, I didn't need it.
Oh, okay, good. Yeah. Oh, that's right. You didn't need the freaking surgery. Duh. Yeah.
And I've been crutch free for
a week, right?
about a week now.
Let's go, dude. How's it feeling?
It sucks.
Oh yeah, I was gonna say.
It's uncomfortable. It is.
What really helped mine out? Obviously, I know you're just a week off crutches, not even, but going to the gym and doing some sort of light leg workout so you can start building the muscle again around the knee.
Yep. As a matter of fact, I went to my chiropractor the other day and I said, "Is this normal? Foot is actually not in line with the knee," and he's the structure muscles around that.
Yeah.
So nothing to be concerned about. He goes, just PT it. You'll be.
How skinny is that one leg?
I don't like looking in the mirror because of.
Oh no. Oh no.
Yeah.
Yep. That's exactly what happened to me.
Great.
Word for word.
Yep, not great. But I pick my knee up and I let my leg dangle. There's like nothing there.
Oh no. Yep. It's
So,
now it's time for road to recovery.
Yep. It's going up the stairs. It's now I use my left leg.
Oh, nice.
Using my own body weight, trying to build. But I still have a fair amount of fluid on the muscle.
So do I. Yep. They actually had to take a needle and drain it out. I almost passed out from them doing it.
Yeah, I don't like that because that introduces the possibility for infection. And luckily, the ortho guy that I was talking to, he goes, if it's not bugging you or causing you pain, in now, whereas before they'd be like, yeah, we'll just pull it all out of there.
Yeah.
Right.
Yeah.
But nowadays they're like, yeah, we're pretty much hands off with stuff like that. We don't like to introduce that kind of stuff. So
I will tell you, it was probably it was crazy how lightheaded I got from them doing that. It hurt, right? It hurt obviously with the needle going in and oh my gosh, dude. Oh man, the feeling of them sucking the liquid out of my knee was the weirdest feeling because I literally felt it like on one of my bones or if it was a muscle, if it was a bone, whatever the case may be, and it freaked me. Oh man!
Think about it, right? They're removing the protective fluid that's keeping all of that stuff away from each other because it's damaged right now until it can heal. So you remove that fluid, and now you've got all that bare, sore stuff mashing against each other again. So I don't have pain. I don't.
That's good. Yeah.
I have discomfort. I haven't had pain since I fell. So oddly enough,
that's good.
But yeah, it's kind of. I was talking to the.
Oh, dude, yeah, that PT is going to be so fun. I'm just gonna tell you that.
Yeah, that's all right.
Yep.
Buck up, throw some dirt on it, and get to work. Right.
That's right, man. That's right. Unfortunately.
A couple of years away from being a boomer myself. I grew up with it, rub some dirt on it, and get to work.
Oh man. Yeah, that's. Oh yeah. Going through
For
that again. I'm
burns.
good.
Yeah. Well, you know, one of the things that I've been doing is I changed my supplement. I started using Boomer's Rule. I started using Comfrey Comp cream. And they actually call it nature's aspirin. My leg was so swollen that the pressure from the swelling was uncomfortable.
Oh yeah.
I couldn't see the bones in my ankle. Well, 4 applications of that just on my knee and down left side of my leg where the tension was. The inflammation was that part of the inflammation.
What?
Yep.
And you've been using that ever since?
If I had pictures, you would probably faint.
Yep.
How quickly it.
That's crazy. That's awesome though.
What was the name of the stuff, Doug?
It's comfrey. It's
Comfrey.
a plant, yeah, and I would grow it in my yard, but it's toxic to dogs, so I didn't.
Oh, comfrey. That's interesting.
Comfrey.
Yeah.
Comfrey.
Oh, Frey. Yeah. I was thinking just Fry.
It might be.
COMFRE.
I've been up since 1 o'clock. I'm probably a little bit punch drunk,
man.
so it could be the other way.
Oh man.
Let's see here. Go for burns. Yeah, dogs do have an internal clock. For him waking me up, probably still wake up. Only a couple hours. Still. So over here on the tickety tock, do we have an end of day dump? We shall see. Trade the trade in front of us. If we get a good pull, we'll trade the pull.
That's right.
Right now, I'm not seeing a whole lot of evidence of that. M2K or the Russell, the micro Russell, is still climbing to the upside. This thing is absolute crazy. Look at the green in the E all day.
That is
from
actually insane.
Yeah, isn't that wild? From 9:30.
No way. It's been in. Oh my gosh! Since 9:30, it's been an uptrend.
That's what I was saying earlier when we were going through this. If you got in on this EWO and stomached all of this garbage, realistically speaking,
you would be.
Got a shed here, here. So 50%.
You wouldn't shed on this downtrend over to the left. On that, yeah, right. Oh, right.
Like I said, if you sat through all of that.
Oh, yeah.
Right, because your stop on your entry is your entry's here. Right. Your stop would be down here. Did it ever come to your stop?
No.
So, do you trust your indicators?
Yep. Yeah.
This is what we train, right?
It touched view up, but it never. Yeah. Because yeah, definitely if view up would have got broken, I'm out.
But this would have been challenging to sit through.
Absolutely.
But you have to let it launch. You got to let it work itself. If you can do that, and your stop is at an appropriate spot based on your account size and your risk management, and you trust your indicators, there's absolutely no reason to get out of this trade. Zero.
That's
right?
Crazy. Yeah.
Right now, if you dumped 50% there, 20% there, and 10% here, you've got 10% going.
Yep.
So let's just do some math.
Actually, you got 20% going.
20. This should have been 20.
Oh,
50,
20,
20,
gotcha.
10. I was forgetting part. 50, 20, 20, 10. So 6 contracts. Shed 3 here. Here. Shed 1 here. Got 1 running.
Mm-hmm.
Anyone want to know how much that 1 contract would be worth?
A lot of money. Oh man, 327.
307 ticks
That's
times
what, 153 bucks?
and a half.
One micro?
Minus fees.
Yep. Yep. Minus fees.
So 150 bucks, basically.
Wow.
Okay. So at your first shed point, shed 3 contracts, 160 ticks. 160 ticks times 0.5 times 3, there's 240 bucks.
240 bucks there.
Then you shed a contract each next time. So here's another shed. 189 ticks again, because it wasn't too different from where it pulled back, right?
Oh yeah. Yep.
There's your next shed. So that's call it 188 for round numbers. Be 144, or that'd be
140.
no, it wouldn't.
144.
Yeah, 180 ticks would be 90. 188,
Oh,
so it'd be
right.
$94.
Yeah. $94. Yep.
Whew, I am getting tired.
Yeah, me too, for real.
So there's 94 bucks. Your next shed point's up here. 268, half of that, 134 bucks. 240, 90, 44, and
You still got 10 going.
question mark.
Oh
'Cause-
yeah.
Because we ain't out of the trade yet. Right?
Yeah. See, that's sketchy, and it's coming to end of day, so you'd have to take it there. You'd have to pretty much take it there. And
At
it's below the
450
9 now.
415, yeah.
Yep.
So right here, our last shed point was here. I've got 10% running. So the rule on 10% is what? Is it above VWAP?
Mm-hmm.
Don't touch it. Keep your dirty nose picking fingers off the mouse, coach would say.
Mm-hmm.
All right, then have a wonderful Thanksgiving. For those of you that have to check out in our Zoom, love chatting with you today. Thank you very much for joining us. Safe.
Happy Thanksgiving, Doug.
Thank you, Christina.
You're welcome.
You as
Everybody have a thank you. Everybody have a good Thanksgiving. I gotta go.
Yes.
All right,
Happy
feel better.
Thanksgiving, guys. Feel
Thank
better.
you.
All right,
Thanks,
guys. Thank
guys.
you.
See you later. Bye.
Hot shower, cold plunge.
Yep.
Oh,
Literally.
that sounds good, actually. I like a cold shower at the end of the shower, though. That's supposed to be good for you too.
Yeah.
Happy
Like the
Thanksgiving.
shock.
Happy Thanksgiving, guys. Whoever's
Hi,
listening.
guys.
Wade over there in the TikTok saying, "Hey, Riley."
What's going on, Wade? What's going on, dude?
President. Oh, so Mr. Smith, where should the stop be now on M2K? Hey, down here.
VWAP.
Below VWAP. Reason being is that you should be managing your trade and watching your. Now, for me, I'm getting towards the end of the day, and at 350, I know volume is going to get kind of crazy. I don't know that I want to. I would probably close my trade out here because I don't carry trades overnight anyway, and the volume is tapering off pretty handily, and on the EWO, and one of my favorite things to see for a reversal or a short-term pull, rounded top. Can't make a new high. We're just kind of lazy about it. If it breaks and holds below the trend channel here, channel 5, now you got a double bottom. You got the 4-hour low. double bottom. You could make a lovely downside play for that. But I don't want to give up too much profitability on this last trade coming into power hour. Because of the great position that we were in, I wouldn't get out of the trade unless I saw some heavy price action downside. But now that we're coming into close to the 10 minutes of power hour, and I'm seeing weakness, and it's rolling over nice and smooth.
But it did roll over right to a, because think about it kind of like this. What would you do? Because as you can see, it's a line of now resistance right from that double top right before.
Yep.
So
what you've got here is this is going to act like support.
Yeah.
There. Because what did we just spend the last hour and a half talking about? Break, retest. We never got our retest level.
Yeah.
Here's our retest of this level. It can't break. If it can't hold,
stay high.
Then it's going to come down here and look for support. And why is that? Well, this is a consolidation. The relative high in that I'm looking at comes down into this area. I want to see it be supportive. And if it's not going to be supportive, comes down further, then I'm probably just going to get out of the trade again because it's the time of the day. If it were earlier in the day, I'd just let it run as long as it's finding support and it's doing its thing. Whatever. Coming into the last few minutes of power hour, close the trade because I'm going to close it anyway. Might as well close it at max profit. Close to max profit. 10 minutes. What is it? 15 minutes left. Do its thing. But that would be me.
That would be awesome. I would love to sit and trade. I would love to sit in a trade that long just to kind of get that under my belt.
Nope. Don't wish that on yourself.
No. Like a big EWO like this.
No, I'm just joking. The reason being is I had an EWO back in February. I did an oil trade from a higher time frame analysis is really what helped me on. I picked my entry based off of oil was pulling so hard that it hadn't revisited that low in 4 years.
Whoa.
So if it's coming down to that, and it went in the bounce at that time, when it did bounce from that level, was a V-shaped recovery. So it came down, straight back up. Didn't want anything to do with hanging around and bouncing around and doing any consolidation. Came down and went right back up.
That's crazy.
Yeah. So I was looking at that. I'm thinking, wow, if this comes all the way down to this level, I was scalping it on the way down. Wasn't doing particularly well because volume was low and it was the gaps, which is why I brought it up before. When you're dealing with oil in low volume situations and you get relatively large tick spread, it can dump and pull quickly on your position. You're not paying attention.
Yep.
Smooth price action, consistent volume on oil, important. But I got into the trade. I protected it almost immediately because it never came back. And I took it from, I want to say it was in the $59 range. Higher than what it is, I think, now. Yeah. Higher than what it is now. And I took that all the way to $.
Holy crap.
Give or take, 62 and some change. And the cool thing about it was I only had enough margin in my account because it was outside of New York trading hours. I only had enough margin in my account to buy one contract. So I rode one contract from 6:30 in the morning all the way until 9 o'clock in the morning. And at that point, I had one of these beautiful pullbacks. It was glorious. It looked very similar to this. So as it was pulling back, it found support off the 9, and I got confirmation of the 9. I added in. And now I had 2 contracts. And that ran for another hour and a half. And then it did it again. So I added in another contract. And I had 3 contracts running. And at that point, I didn't know enough about DCAing and how Webull, you're buying and selling contracts, how Webull does that, how most brokers do it. They automatically set your account to first in, first out. So the first contract that I had way back in the lowest position was the first one that sold off. So my position went from DCAing here, okay, to DCAing all the way up here. Because that one contract sold off first. And then I think my last contract I actually sold off for a loss, small loss, because it pulled back so quickly. But if I would have understood the DCAing more in depth like I do now, that was my, well, lesson learned, notes in the journal.
Mm-hmm.
But that trade, that one trade, between all 3 of those contracts, I think I, at its highest point, was $480 micros. And the trade duration was 6.5 hours.
Holy
Did I leave?
crap.
Did I leave my seat for 6.5 hours? Freaking way.
Not. Yeah.
No way. Ask my wife. My face was glued to the screen, and my hands were in my lap. I was sitting on my hands actually for the longest time. But that was my first live
So you
Evo
wouldn't
trade.
touch it?
Nope.
Yep. That's crazy.
And it had a heavy pullback. That's why I got out of it. I mean, the thing came up and then went like this. And 63 was right here. And I'm like, dog. And as soon as it broke below the 50, I had my stop just below the 55, stopped me out. And I didn't give it enough room. Well, the lesson that I didn't take from Coach was I put my stop below VWAP because the dang thing pumped and went to 64 during the New York session. That would have been $1,000 trade.
Wow.
That would have been my first comma.
Holy crap.
So, reason why say what we say, ladies and gentlemen, is because if you let the runner run, you can stand the pullbacks. Because by the time I shut up here, the last 2 contracts that I had were completely free.
Yep.
And full.
Yep. It's actually wild.
Josh, I filled up a quarter of the pad with notes. So yeah, that was a really cool trade.
And is there some news somewhere?
I'm aware of something. Oh no, this is going to be the end of the day. This is Power Hour.
Washington's closed down from guards being shot.
What's that, popped up?
Washington D.C.'s being the White House is being closed down. I guess because cops everywhere. The 2 guards are shot or something like that.
Oh, no kidding.
Yeah, I heard about it in the other Zoom, and Benzinga Ben. What's his name? Ben. I'm so tired. I've been up.
Oh, you're a pre-market guy too. I imagine you're pretty tired.
Yeah, and I was in crypto last night.
Oh, jeez. Do you have any wick on your candle left?
Not much.
Not much. But
I'm just finishing off a couple swing trades.
All right, so let's check this out. This is going to be a bounce off the 200. I don't think so. Not right now, anyway. Here's something to consider. All this over here. All of these bottoms. So validation support over here. We're going to be challenging again, and 100 is would not be getting into short or long at confirmation direction. Or you were not already in the trade on the what? Break and hold of the 9. Main scale strategy. There's your bounce. Now, if you were paying attention and you got down here and you saw this happening and you got into the trade down here with your stop below the 200, you go in super light. So dynamic sizing in your trading is important, everyone. If you're not doing it, you should be doing it, because although this is a high percentage trade, it is power hour and it could very easily just yank all the way through there. So if you are doing these kind of high supportive bounce scenarios, you want to make sure that you're watching very intently. Volume to the upside, you're in it. Your stop is directly below the wick of the previous candle or the 200, which is going to be your main level support. Now we have the bottom of the channel here too that's going to act like, and the 4-hour low that we made over here. Okay. That being the case, you can take a quick scalp off of this area up to the 9 and no further unless you get confirmation. Scalp plan here is to take it from the 200 to the 9, bang, bang, in, you're out, quick like lightning. There's a beautiful response off the 200. So again, you could have played this from the 9 down because we are in a downtrend, all the way to the 200. And you play the bounce off the 200 again. So in 2 candles, in the 2-minute candle, on the 2-minute chart, you got break and hold of the 9, scalp to the 200. Ride the 9 or ride the 200 bounce all the way up to the 9, ride the 9 down, right back to the 200. Rinse, repeat until it shows you otherwise. We had a scenario during a news event. Coach Mark and I were trading on a futures Sunday, and Coach came in. And I can't remember what the occasion was, but we had VWAP. VWAP was up here. 200 was down here, where it is. And in between those two zones, we were channel trading that sucker, and it bounced up and down and up and down and up and down like 6 or 7 or 8 times. And Coach was riding the bounces the whole way, up, down, up, down, up, down. I can't remember how much. It was substantial. So what a great training moment to have Coach come in there and show you how to channel trade between VWAP and the 200. You don't have a membership. I honestly don't know what you're waiting. So here we are stuck in consolidation towards the end of the day. Low volume again. It's prior to a holiday. Most of them are in their cabins or, you know, driving over to their in-laws. Or be careful. You're still trading. You shouldn't be in power hour anyway. Just so real quick, over here on YouTube, can I clarify the ECA for the dollar cost average? Sure thing. So do this. Show you. Into a short here, even though it's probably going to bounce. Okay, so I'm in for one contract. If I add a contract here, watch what happens to my position. It moves down. Okay, it'll average between your two price points and move your overall position. Challenge with that is if it goes against you, it's now doubly hurty. Okay? Good. So only dollar cost average into a trade when the trade is going in your direction. Never dollar cost average into a losing trade. Okay? The reason being is it doubles or triples or quadruples, whatever your dollar cost averaging, it X factors losses. So only dollar cost average in the direction of a winning trade. And then as you sell off, if you don't sell off all at one time, what it's going to do is say your first position is up here and you dollar cost averaged down here thinking it was going to continue to pull, this thing yanked against you. Well, your position up here and your position down here just got moved down here. Well, if this thing spikes right here, you're now in a losing trade. Regardless of your position up here being a winning trade, you got into this position here, you are now way in the loss. Because if you enter down here, that's a 65 tick negative trade on the position that you added down here for a short. So only dollar cost average when the momentum is in your favor. If you're this far away, I would never dollar cost average this far away from 9 and on support. Because around support, you're going to get this. Even if it continues to pull, you don't want to deal with all the chop. So when you're dollar cost averaging, do it. Sure that it is in the moment. Break and hold of the 9. You break the double top, you get good volume. On this candle, you add in. Well, now your buying position is here. Stop loss you. Sure that it's below the double top. Why? Because the double top's support on it right here. Or fine. So dollar cost averaging, you can do it, but only do it in the direction of a winning trade, whether it be a short or a long, doesn't matter. But make sure it's in the momentum of the trade action. Mike, got it. So does that make sense? Never dollar cost average into a losing trade. You're going to get your soul ripped out, stomp on it in the mud, crying some. Now, when you sell off, it's going to sell off your early position. Say your dollar cost average was here, your add-in was here. When you sell off one contract, it sells this one off first, which means now your buy position moves up to your last contract. Now, pullbacks, kind of a pain. You can change that. There are some brokers that don't allow the change, but you can change it in Webull. You just have to make sure that you understand what it is, and if membership, come on into the live Zoom. With that, it's 4:01. We're done for the day. It is the holiday week, holiday weekend, Black Friday sales again. Come on in, our Black Friday sales. If you join us on Friday, you're going to be shocked with what we have coming up. Please join us on Friday for the Black Friday sales. We do have early Black Friday happening right now on the Diamond membership. Again, I can't tell you the price point on TikTok. I apologize. So get the memberships. Come into the free Discord. You can join us at American Dream Trading. Can't see the latter part of it again to get us for it. But you know how the webs works. American Dream Trading is the website. Come on in. Click on Join the Community. Join the community. That'll get you into the free Discord. Make sure you verify yourself. Follow the directions that you will receive in email and the welcome letter. When you do come in to the Traders Lounge, say hi. Tell us you're new. We love those questions. I'm new here. Where do I start? You'd be surprised by the response. I think that's pretty much it. We've got our 7-day free trials. It's risk-free. Just come in, join the Zooms, listen for 7 days. If you don't find value in it, cancel. No harm, no foul. But I think you're going to find that the value that we have here in our community is more than worth your time. Just change your life. One trade it. Happy Thanksgiving, everyone. Have a wonderful and safe holiday. We will see you on Friday in the Zooms.